This is Horizon's Middle East and Africa, our top stories this morning. Monday, market mania. A global stock rout deepens in Asia, continuing the Friday sell-off on Wall Street. Treasuries and the yen rally in the haven rush as traders bet the Fed will now need to cut rates aggressively to fend off a recession. Israel bracing for a possible attack in retaliation for the assassinations of Hezbollah and Hamas officials. Meanwhile, the U.S. continues to press for a ceasefire deal. Plus, inside Adani, Bloomberg gains unprecedented access to the leaders of the Indian conglomerate as it cements a succession plan and battles fallout from the Hindenburg short seller attack. Well, it has just gone 8 a.m. across the Emirates. I'm Jemana Bersechi in Dubai. Unclear where to start this morning because we are witnessing a broad-based sell-off, red all over these markets. The handover, obviously, from Wall Street, pretty negative on Friday after that NFP print surprised to the downside, both for the headline figure and an uptick in the unemployment rate. That saw a massive decline in yields and a big sell-off for equities by the close. This morning, it's not looking too dissimilar. So S&P closed down 1.8% on Friday. Today, futures are pointing to another weak session down 1.5%. NASDAQ, the close was 2.4% on Friday. Today as well, look at those futures as we head into the U.S. session, down 2.8% already, building on some of the extreme losses in the Asian session overnight. Topics down 7.3% just in one session, officially in bear market mode now. So down more than 20% of those July highs. At some point, the circuit breaker had to get put in because these losses were so extreme in such a short amount of time. So very extreme losses as we had handover from the Asian session. And then the Asia-Pacific index also down almost 4% in the session as well, pretty much wiping most of the gains for the year. So we're almost back to flat on a year-to-date basis for these Asian-Pacific markets. Flipping over the board, let me just draw your attention as well to what's been happening in yield space. Two-year yield sitting at 3.85. We rallied 25 basis points on Friday, 2.5. Today, we're down another 3 basis points as well. The market is pricing in 45 basis points of cuts going into the September meeting, more than 100 basis points for the rest of the year. So again, a lot of pressure being put on the Fed now to do more and be more aggressive. Dollar yen as well. We continue to see more money being poured into the yen. That started with the Bank of Japan hike and has not stopped ever since, sitting at a 144 handle now, 1.5%, down 11% in the last month. Bitcoin at one point was down 10% overnight as well, down 8.7%. We don't usually talk about Bitcoin, but I do want to draw your attention to it today because it is one of those positions that is crowded, and anything that is crowded is being sold out of. And then Brent as well, the downward momentum continues. We are clearly broken through 80 to the downside. $77 is where we're at. Some stabilization coming through this morning. But again, over the course of the week, Brent and crude are down more than 10%. So a lot of repricing is going on in these markets. Let's get more color, however, on how these markets in Asia are faring. Avril, topics down 7%. Give us more commentary on what traders are doing and how markets are reacting to this risk-off session.
Certainly, I mean, we're seeing the carry trade being unwound, and that is hitting other asset classes. The yen are surging. We're seeing no appetite for Japanese stocks. As you say, this is something that was triggered post-BOJ, but then, of course, the U.S. jobs print not helping things along. So today, all the sectors on the topics are down. We're seeing the topics and the Nikkei almost 20% declines from their July peaks. If you're wondering how much further selling there is to go, consider the extreme that we saw during the pandemic, 30% declines on Japanese equities. The banks are also getting hard hit today as we see these yields in Japan rapidly declining. That could affect their margins. We're seeing the Japanese bank stocks experiencing their worst day since the 1980s. A lot of selling going on, Jumana.
Yeah, indeed. That's one way to phrase it. Certainly a lot of selling is going on. Avril Hong in Singapore. Let's bring in June Beilu, a portfolio manager at Tribeca Investment Managers, Partners, to get more insight on this market activity. June, do you think that markets are overreacting here?
Absolutely, absolutely. I think it's overreacting, and different markets represent different opportunities at this point. Now, let's taking a step back. All we saw was a few percent pullback, and that's after over 350 days of going up with a drawdown not like this. So market has gone up a lot, and we are just correcting and if not consolidating somewhat. Of course, for the technology sector, it's down a little bit more because valuation has become a little bit more stretch. We have talked to that for quite some time now, and the earnings a little bit softer. But we do think the rest of the market is overreacting. Of course, now at this point, market is trying to price in, 50 basis point cut in September and the like, and also market is a bit worried about the recession that is, potentially pending. Our view is that Fed will cut the rate quite aggressively, and given the data has been weak, and that impending recession I don't think it's likely to happen.
In situations like this, what becomes very evident is that it's so broad-based. It's not just one particular asset that's being sold down, but many of these very popular, overcrowded positions have all seen pullbacks. And so if you were invested in, say, one of these assets, experience a margin call in one of these assets, you will have no choice but to sell down some of your other positions as well. How do you think that is also affecting what we're seeing in the markets right now? Just the proliferation of what might be margin calls?
Yeah, look, absolutely. So you're absolutely right. And it could be a big driver of what is coming, and what is happening, of course, at the moment with the US future as well, a broad-based sell-off because of some of those pressures, interconnected nature of the capital markets. Our view is that this, for a investor, is an amazing time to really picking up building positions in companies we want to buy. Take a step back, again, thinking about the fundamentals of the economy and the businesses. Look, the corporate margins holding up okay. Economy is slowing, but not too bad. And the Fed is in line about to cut rates, and that will send signal to the rest of the world's central banks as well. With that kind of in the back pocket, I certainly feel this is a really great opportunity to be taking on a bit more risk when this, when the share price, is down a lot. A lot of high quality companies, is on fire sale at the moment.
Yeah, when do you start buying, though? Are you waiting for further pullbacks, or is this the time to start scaling in?
It's always very hard to pick when do you get in. So, my view is that when you see opportunity, draw a price point, see opportunity. Like today is a good opportunity to pick up some of the companies, but usually sell-off does last a couple of days, and we will ease into the positionings we want to buy into. But it's always very hard to pick the very bottom. But my view is that at the current price, you see value.
Yeah, the market is, somewhat surprisingly, the repricing has happened so quickly, but 45 basis points is now priced in for the September meeting. This tells me that the market is very likely to be disappointed if the Fed don't actually go for that 50 basis point cut. Could that just be another catalyst for a leg lower because simply the market has got ahead of itself in terms of Fed expectations now?
Well, it could be, but I do think the Fed will cut. So if the macro data is now clearly slowing down quite quickly, and more so than expected by Fed, and I do think they will cut, more or less in line with the market expectation. So I do think that this adjustment is really one-off, and there might be still a bit more choppy days, but it's kind of in the market, in participant expectations.
Let me just round up by asking you, since you do think that it could be a potential to scale into some positions, what sort of sectors you are thinking of buying into once the dust settles here? What are the sectors that will perform in an economy that has clearly started to moderate?
Absolutely. So, so let's talk about the sector, I guess, the US and the like first, and then we'll talk to the different geographical markets because, geographical markets fascinating at the moment. So with the US, clearly what you want to look at is the more consumer-facing sectors, the cyclical sectors. We are heading into a rate cut. And these companies, yes, they do, at the moment, they are getting sold off, but they represent quite a lot of value proposition into a rate cut. And usually they do perform very, very well as the rate cut takes place and as we, go through the 125 basis point that's expected cut by the market. So, I think these are the sectors that you should absolutely start positioning. But globally, Japan market, it looks incredibly, interesting at the moment with the currencies up and then with the market down so meaningfully. We do think that represents probably the most attractive, investment proposition at the moment.
Yeah. June, thank you so much for coming on. Big market moves today. Jun Bei-Lu, portfolio manager at Tribeca Investment Partners. Also just want to flag NASDAQ 100 futures now have extended their losses to 3%. These are the futures we're talking about, pointed to 3% down on the open. All right, still ahead, Israel is bracing for a possible attack as U.S. Secretary of State Antony Blinken reportedly tells allies that Iran could attack the nation within the next 24 hours. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Israel is bracing for a possible attack in retaliation for the assassinations of Hezbollah and Hamas officials, while the U.S. continues to press for a ceasefire deal. Now, according to Axios, the Secretary of State Antony Blinken told G7 counterparts on Sunday that an attack by Iran and Hezbollah could start within 24 hours. So let's bring in Ian Parmeter, research scholar at the Australian National University Centre for Arab and Islamic Studies and a former diplomat as well. Ian, great to have you with us on the show. It just seems like the rhetoric keeps escalating over the weekend. Lots of embassies advising their citizens to leave Lebanon. Talk of an imminent attack in the next 24 hours. What is your level of concern about what we may see in the coming days in the Middle East region?
Well, I think there's no doubt there will be an attack on Israel in some form. The supreme leader of Iran, Ali Khamenei, has directed that. And his directions will obviously be carried out, as he is the main decision maker. The Islamic Revolutionary Guard Corps has also issued a statement saying that the attack on Israel will be at a time and manner of Iran's choosing. Now, Iran is clearly telegraphing this attack. My feeling at the moment is that it doesn't want the dangers in the region to get out of Iran's control, which they risk doing, given that the United States now has a carrier battle group in the Persian Gulf, and that it also has air and naval assets in the Eastern Mediterranean. So the risk for Iran is that if this gets out of hand, there could be a wider conflict, which could actually affect Iran's nuclear program. There could be attacks on that as well. So I think Iran will want to attack, but it won't want it to be so great that Israel has to respond seriously back again.
Yeah, well, that was going to lead me to my next question, which is about what the likely Iranian retaliation is going to look like, because we know that it is not just going to be coming from Iran itself, but also potentially via its proxies simultaneously. So you're going to get a retaliation from Iran, from Hezbollah, and potentially Houthis all at the same time. What does that look like in practice?
Well, it could be very serious for Israel if it is as wide an attack as that. And there's good reason to think that whatever Iran does will be coordinated with Hezbollah, the Lebanese militia group. Iran, of course, controls Hezbollah, not the Lebanese state. And Hezbollah has its own reason for attacking Israel at this time because of the attack last week, which killed one of Hezbollah's leaders, Fuad Shukr. And Hezbollah has promised retaliation for that. I think there's a very good chance that both Hezbollah's and Iran's retaliation will be combined, to make them as effective as possible. But as you've said, it's quite possible that the Houthis in Yemen, who are also allies of Iran, could get involved, but also militia groups in Syria and Iraq. Now, if all of them fired rockets and missiles and drones at Israel at the same time, that could be difficult, not just for Israel's Iron Dome system, which is a very effective missile intercept system, but also be difficult for the United States to assist Israel to counterattack. So the risks are very high. But as I said in response to your first question, I think Iran will not want this issue to get out of hand to the point where it can't control what's happening.
What about the Iranian regime itself? A lot of turmoil there in the last couple of months after the killing, or the death, rather, I should say, of President Raisi, new president in Tao. And yet it was extremely embarrassing that the assassination of Haniyeh took place in Tehran, in central Tehran, a security lapse on their part. They're doing an evaluation of what's going on. It seems to me and to the outside world that the Iranian regime is not as strong as it would like to portray, that there are creaks on the inside.
I think that's a reasonable judgment. The killing of Ismail Haniyeh is a double blow to Iran at this time. First of all, Haniyeh was an honoured guest of Iran, and he's been killed while under Iran's protection. And according to the rules of hospitality, that is a grievous thing to happen, a grievous embarrassment, as you said. But the second thing is that it shows that Israel has extraordinary intelligence and operational capacity inside Iran itself. We know at this point that Iran has arrested some 22 people who are involved in security services and specifically involved in protecting the facility where Haniyeh was killed. And they will be questioning them very carefully to see if they can find out just who is assisting Israel with these attacks, because this isn't the first. Several Iranian nuclear scientists have been killed in recent years. And in 2020, the head of Iran's nuclear program, Mohsen Fakhrizadeh, was killed in a remarkable operation which involved a remotely controlled machine gun which shot at his car and killed him. So Israel has a very, very effective intelligence and operational capacity inside Iran, and Iran will want to find out what's going on. As well as that, of course, we still have the echoes of the demonstrations that women protesting against use of the hijab were carrying out last year. So it's a serious situation for Iran at the moment.
Yeah, critical both externally and domestically. Ian, thank you so much for your views and for coming on our show today. Ian Parmeter, research scholar at the ANU Center for Arab and Islamic Studies. Now, we're keeping a close eye on some of the developments that are happening in markets overnight. Massive risk-off session. Just to give you another flash that has come through, MSCI Emerging Market Stocks Index has dropped the most since June 2022 on a closing basis. So it's not just these G10 indices that are dropping, but we're also seeing the likes of emerging market stocks get hit as well. Even credit bonds are widening too. So this is a broad-based risk-off session, and we're going to keep monitoring throughout the course of this show. Also coming up, protests across Nigeria have leave at least 21 people dead, but the president says they are politically motivated. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Nigeria's president says demonstrations last week that led to the deaths of at least 21 people had a political agenda and were meant to undermine his government. Crowds marched through several cities of Africa's most populous nation to protest against a series of economic measures, which Bola Tinubu says are painful yet necessary.
I've directed that tariffs and other import duties should be removed on rice, wheat, maize, sorghum, and drugs, and other pharmaceutical medical supplies for the next 6 months, in the first instance, to help drive down the prices.
For more on this, Bloomberg's Africa correspondent Jennifer Zabazaja joins me now from Johannesburg. Jen, first of all, is this going to go far enough to quell concerns amongst Nigerians?
You know, Jumana, just initially looking at what we're hearing from a lot of Nigerians, it might not. And the concern really that we're hearing from a lot of people is that this is mainly about the poverty situation. And because of what we did see from the president and the administration reversing back some of those subsidies, it just added more pain to the pressure that they were already feeling. And so we're getting a lot of that reaction on social media and the like, just about how some people do not believe that the president completely understands what it is that they are concerned about and what they've been protesting about. And there are still protests planned going forward. But, you know, as you mentioned in your intro, Jumana, Tinubu does believe that these protests really do have a political agenda and are trying to undermine his government's efforts to stabilize the economy. And so the question will be whether or not we do see protests picking back up again this week, especially given the fact that we did hear the president say that he was trying to ease some of the concerns as far as some of those staple items, bringing down the taxes on those.
Yeah. And Jen, what actual progress has there been in chipping away at the country's poor economic standing? Clearly a lot of pressure on the government right now, but how much progress have they made?
Right. And we've seen that across Africa, really, a lot of these administrations having to figure out how to get their country back on a stable level, but then also having to deal with what you're seeing right now on the screen, which is just a lot of pain that everyday people are faced with. What we heard from Tinubu and others for the past few days, we heard that half-year revenue actually more than doubled to 9.1 trillion naira in June. And we also reportedly are learning that debt service now only consumes 68% of revenue. That is down from 98%, which is just about 13 months ago. That is still very high, right? And of course, we have to factor in the big question mark, which is oil production. Nigeria, of course, is Africa's biggest oil producer. And they do say that oil production increased to 1.61 million barrels a day in July. So potentially that then brings the economic situation a little bit more stable. But, you know, as you were talking about earlier in the show, we have seen EM struggling. The Naira has, of course, depreciated 70% since Tinubu enacted some of these reforms a year ago. And so when people actually feel this will be a test.
Jen, thank you so much for the overview. That was Bloomberg's Africa correspondent Jennifer Zabazaja. All right, a quick look again at markets. There is so much going on here. The Asian Pacific Index now the biggest move since 2020. S&P futures down 1.6. NASDAQ down 3%. We'll be right back, and we're going to be talking more about Saudi Arabia looking to increase its stake in a struggling construction conglomerate. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Monday market mania. A global stock rout deepens in Asia, continuing the Friday sell-off on Wall Street. Treasuries and the yen rally in the haven rush as traders bet the Fed will now need to cut rates more aggressively to fend off a recession. Israel bracing for a possible attack in retaliation for the assassinations of Hezbollah and Hamas officials. Meanwhile, the U.S. continues to press for a ceasefire deal. Plus, inside Adani, Bloomberg gains unprecedented access to the leaders of the Indian conglomerate as it cements a succession plan and battles fallout from the Hindenburg short seller attack. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. It is Well, market mayhem this Monday. How can I phrase it any other way? Big moves we're witnessing, building on from some of the losses from Wall Street on Friday. Of course, after that NFP print surprise to the downside, both for the headline figure and on the unemployment rate, the market is now pricing in more than 100 basis points of rate cuts by the end of this year. On Friday, we had the S&P close 1.8% lower. Futures are pointing to another weak session today. The Nasdaq on Friday also closing 2.4% lower. Today, you can see these futures are basically signaling an open of more than 3% weaker. But take a look at what's been happening with some of these Asian stocks. The topics down 8.5%. We're just hearing now that circuit breakers have been put in place for the Nikkei as these futures continue to accelerate with their losses. 8.5%. We are technically in bear market territory, so more than 20% of a pullback from those July highs for the topics and the Nikkei. And the Asia Pacific Index also down 4%. This is its biggest slide since 2020. So since the days of COVID, we have not seen a move like this for these Asian Pacific indices. Switching over, let's take a look at some of these other assets we're monitoring as well. Two-year yields, massive moves on Friday. We were down 25 basis points at one point. So bad news is now bad news again for these fixed income instruments, down 5 basis points on the session today. As we speak about what is priced in for the Fed, the market is looking for 45 basis points of rate cuts at the SEP meeting. Dollar yen, money keeps pouring into the yen. We're now trading at a 143 handle, 2.5% stronger on the session. Bitcoin pulling back 8%. And then Brent, we're sitting way below $80 now, broken through 77 to the downside. A little bit of support coming through just in the last couple of hours or so, but namely a lot of downward pressure, completely brushing off some of those geopolitical concerns for the region. All right, Avril is in our Singapore studio standing by. And Avril, just get us up to speed on some of these huge moves that we're seeing in Asian markets.
Yeah, extreme positioning you're seeing being unwound, and that's really also prompting this rally we're seeing in the Japanese currency as those carry trades get unwound. We're also seeing how, as you mentioned a short while ago, that move on the topics, it's set for its worst day since 2011. That's the aftermath of the Fukushima meltdown. Now, on the yen, it's interesting how it's already broken through the 100-week moving average on dollar yen, which suggests that traders see more appreciation in the Japanese currency, and the next levels to watch could be the 126 to 127 level. It's not just about the fundamentals, given the expectations of a hawkish BOJ meeting, the expectations of a dovish Federal Reserve. There might also be a bit of safe haven flow, given what we're seeing between Israel and Iran. Jumana.
Yeah. And you've got to wonder whether the finance ministry in Japan is actually happy to see this move without any help from intervention. Avril, thank you very much for the overview. All right, switching over to the region, the United Arab Emirates is providing one of the largest humanitarian missions of the Israel-Hamas war. Aid efforts are concentrated in El-Arish, a small city about 50 kilometers away from Gaza. So let's bring in our Mideast economics reporter, Abir Abu Amar. Abir, talk to us about the details of this humanitarian mission, the cost, the logistics. How did it take place, given, as we know, it's very, very difficult for anyone to get access into the Gaza Strip?
Absolutely, Jumana. So good morning. This was during a trip, essentially, that we had early in July. This was my second trip to that region. And you could really tell that by the second trip, I think the span of those was 6 months, you could see that the humanitarian operation has been amplified by the UAE. So, we spoke to officials on the ground who estimated the cost of this mission by the UAE at around $700 million. Now that amount could have increased by the month, since the month that we've been there. But essentially, this includes the medical facilities, the warehouses, food, clothes, medical supplies. The UAE has over a dozen desalination plants that provide over 1 million gallons of water for the Gazan people. This is all based in El-Arish. But there's also a makeshift hospital on a massive ship anchored by the Mediterranean emergency that hosts, Gazans that are in critical conditions, people that wait on that hospital to be, moved, relocated to the UAE or go back to Gaza once their condition has been stabilized. So we met a lot of these people. We saw the operation, and you could really tell that the UAE is using, these diplomatic relations that it started with Israel, these diplomatic relations, the existing ones that it has with Egypt, to sort of have this level or this magnitude of an operation on the Egyptian side, but also within Rafah in their field hospital.
Yeah. I mean, you mentioned that UAE has these diplomatic relations with Israel. And of course, they're one of the few Arab countries that signed a normalization agreement with Israel, the Abraham Accords, back in 2020. How do all of these humanitarian efforts fit into the picture? How is the UAE trying to increase its influence in the region?
Right. So, when we mention the word soft power, the UAE really comes to the spotlight, right? So, one of the people that we spoke to for this story, LSE Stefan Hertog, was saying that part of the UAE's reasoning behind this massive humanitarian operation could be to, combat some of the, according to him, the flack that it's been getting by Arab countries and Arabs generally over normalization. But we know from our sources that the UAE stance on normalization has not changed since October 7th. And that's mainly because what the officials keep telling us is, the normalization deal has allowed the UAE to have dialogue with Israel. And we know that they've kept this dialogue open. Now, Rayman Hashimi told us for this story in a statement that the UAE would be willing to send boots to the ground once a ceasefire has been reached and once there's a reformed Palestinian Authority in charge. So that really brings together all these elements about what happens next. And I think all parties involved in this conflict, the ones that are talking, the ones that are directly involved, are really just waiting for what happens next to ceasefire talks, especially after the events of last week, as you know, Jumana, the killing of Ismail Haniyeh and Fuad Shukr in Lebanon. So those are all, the UAE, I think, is looking intently at the situation. It is waiting to see what happens. So that's the situation.
Yeah, Abir, thank you so much for the overview and for shedding light on that important story. Abir Abu Amar. Now, Saudi Arabia says it's considering raising its stake in struggling construction giant Saudi Binladin Group and is weighing up other measures to help stabilize its finances. The company is seen as being key to Crown Prince Mohammed bin Salman's Vision 2030 agenda, especially its construction projects. So for more on this, let's bring in Bloomberg Saudi Bureau Chief Christine Burke. Chrissy, good to have you with us on the show. First of all, what kind of steps are we talking about here on the construction side, and why is it seen as such an important part of Vision 2030?
Well, good morning, Jumana. I think we should first start with some context about this company because Saudi Binladin Group has a long-running history with Saudi Arabia, so much so that this relationship goes back to when the kingdom was founded in the 1930s by King Abdulaziz. Saudi Binladin Group is actually responsible for carrying out a lot of the government works that have gone on across the kingdom over the last 90 years to help it modernize the economy. We're talking about highways, airports, things like that. It has also been crucial in key developments in religious cities, holy sites like Mecca and Medina. But it is also a company that has been falling under hard times for much of the last 10 years. It's actually been trying to undertake some sort of restructuring for the better part of 5 years, as it has faced years of losses and also has a heavy debt burden. Remember, this company is the company that suffered a pretty horrific accident in 2015 when a crane collapsed in Mecca and killed more than 100 people. That's really what started to lead to the troubles. Now, Saudi Arabia's finance ministry has said, hey, we're going to step in and we are going to help shore up this company's finances. We may pay out some of their bank dues. We may generate loans, and we may even take a bigger stake in the company. Saudi hopes that this will ultimately allow Saudi Binladin Group to finish projects that are already underway and then get financing for more projects. And it's that latter part that is key, Jumana, because Saudi is carrying out massive construction works. We have the World Expo coming in 2030, possibly the World Cup in 2034, and it needs reliable local partners to get those projects done.
Yeah, it reminds me a little bit of all of the construction activity we saw in Qatar ahead of the World Cup there. So let's talk about the World Cup in Saudi. What is the current status of the bid? They're bidding or likely to bid for 2034. What do we know about their plans to host it? Should they actually win the ability to host the World Cup?
Yeah, of course. So, we've actually been talking about the 2034 World Cup here in Riyadh like it's a done deal. But the reality is that there are still a number of steps that need to be taken. The thing that we've most recently seen from Saudi Arabia is last week, Saudi Crown Prince Mohammed bin Salman actually finalized the bid. He put his pen to paper, signed off on the proposals that are included in making this final bid. Essentially, Saudi Arabia plans to have 15 different stadiums that will host at least 40,000 fans. And it will host games across 5 cities, of course, including Riyadh, but also in Jeddah and in Neom. Now, the next step that we need to see is, of course, FIFA actually confirming that Saudi Arabia will go ahead and host. Saudi Arabia is the only bidder, so it does seem likely, but it won't be until December of this year that FIFA hosts a meeting and ultimately delivers its final decision. I think the key question becomes, if this does go ahead, when is it going to be held in Saudi? Obviously, it's quite hot here, so I think there are a lot of questions around the timing of any potential World Cup in 2034.
Yeah, maybe we get another December one, like what we got for Qatar. Bloomberg Saudi Bureau Chief Christine Burke, always good to chat to you. Thank you. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, up next, our exclusive interview with Indian billionaire Gautam Adani as we begin a week of special coverage on his business and succession plans with unprecedented access to the Adani Group and its next generation of leaders. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, today we begin special coverage of one of India's biggest and most controversial business groups in our exclusive interview with its billionaire founder, Gautam Adani. He reveals how he's putting in motion one of the world's largest and most challenging succession plans. That's even as the Adani Group continues to face fallout from the short seller report that last year wiped $150 billion from its market value. Adani also dismisses allegations that the conglomerate's dominance in key sectors of India's economy is due to his relationship with the Modi government.
It's been a volatile few years for Gautam Adani. The Indian billionaire has built the Adani Group into a sprawling conglomerate that controls large and critical infrastructure projects in one of the world's fastest growing economies. While it's made Adani one of the world's richest people, it's also attracted accusations of cronyism over his close ties to Prime Minister Narendra Modi, as well as questions about corporate governance. In January 2023, those concerns erupted onto the global stage when short seller Hindenburg Research accused the Adani Group of fraud and stock price manipulation. Though they denied those allegations, the report still triggered a $150 billion meltdown in shares of the group's listed firms and cast a shadow over the company, just as it was eyeing a wider global play. The stocks have since then pared most losses, and the Adanis have tied up fresh lines of bank and equity financing and won a reprieve from India's Supreme Court. But fears linger as investigations by India's market regulator and the U.S. Department of Justice continue. It's with this backdrop that the 62-year-old founder spoke to Bloomberg's Anto Antony to say he's setting in motion a succession plan that will hand the running of his massive conglomerate in about 8 years to the next generation of his family, which he dubs the G2. Adani limited on-camera questions to succession. We asked him about the impact the short seller report and its aftermath had on this transition plan.
Mr. Adani, you said that this succession plan was conceived about 10 years back. Now the last 2 years incidents, the investigations, the Hindenburg report, has it affected it in any way, the implementation?
In hindsight, I can say that it is this incident makes family more together and work very hard to fight it back. And I definitely basically see that they have converted this incident into the great opportunity for family uniteness. Secondly, they work hard, and whatever corrections in each and every aspect of our businesses we have to do. And in fact, basically these Hindenburg issues of this last year was Adani Group history is the highest performance.
Many people attribute your business growth to how you strategize your company's priorities to that of the government's priorities, whether it is state or center. Is that something that you will ask the next generation to continue?
I strongly believe that when you basically business directions towards government priorities, you always basically get the tailwinds and not the headwinds. And that helps your group to grow faster.
That strategy has meant the Adanis now control big chunks of India's infrastructure, including ports, airports, and data centers. So the decision on how the Adani Group will be managed in the future will have ramifications beyond the conglomerate and the family.
Tell us about your succession plans. What steps are you putting in place to ensure that this goes on smoothly for the investors, the family, as well as the company?
Succession is a very, very important for the business sustainability. And it must be organic, gradual, and a very systematic. Succession is not one of the events, but it is a long-term journey. And my plan of succession started almost a decade ago. And I gradually inducted our G2, Pranav, Karan, Sagar, and now Jeet. And the successions will be completed according to my planning in next 8 to 10 years.
Adani Group Chairman Gautam Adani speaking exclusively with Bloomberg's Anto Antony. And our special coverage of the Adani Group continues all week. Tomorrow, we ask Gautam Adani's eldest son, Karan, about taking over one of Asia's biggest logistics businesses and about claims that the Adani Group is too close to the Modi government. Our coverage culminates with a special report on Friday at 11:30 a.m. Hong Kong time. That is 7:30 a.m. Dubai time, so do not miss that special report. All right, we are keeping close tabs on what has been happening with the markets this morning. A massive risk-off session. Just to highlight now that the MSCI Asia Pacific Index is now down 4.3% and has fully erased the year-to-date 2024 gains. So we are back to flat on the year after the massive pullback that we've seen in the last couple of weeks. Today, down more than 4%. This builds on from some of the losses in other markets as well, with the Topix and the Nikkei down more than 6 to 7%. Circuit breakers actually being implemented now to give these markets a bit of a breather, given how much volatility there is. We're going to talk more about these markets when we come back. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, it is a massive day for markets. Huge sell-off from Wall Street and from Asia as we talk about the handover. S&P futures leaning towards 1.7% weaker in the session. NASDAQ futures down 3.3%. This after closing more than 2.5% lower on Friday. Down more than 10%. So clearly in correction territory. But take a look at what's been happening with the Japanese indices. The Topix down 9% now, 9%. So technically in bear market territory now, more than 20% from the highs we got to just a few weeks ago in July. So all of this has happened really quickly. The MSCI Asia Pacific down more than 4.3%, as we just flagged before we went to the break, completely erasing some of the year-to-date gains. So back to flat on the year. Major market moves, and it's not just in equities. We're seeing it across all assets as well. Let's talk more about this with Garfield Reynolds, who leads our Markets Live Asia coverage. Garfield, is all of this just because of one NFP report on Friday? One miss can catapult these markets into such big declines?
Well, no, I don't think it's just because of that. That report crystallized a lot of the concerns that had been building, over the previous couple of weeks. I mean, in fact, if you look, the S&P 500 topped out mid-July, and although we had some optimistic equities action after that, there was plenty of angst that was building, and that peak in and of itself had a lot of people worried that equities had gone too far, too fast, and had been built on too narrow a base because of the AI boom. So we had poor earnings at the back of all of this, and not just for America.
Yeah.
You look at a lot of bad earnings for companies in Europe, in particular luxury goods makers there, which highlighted the downturn in China. So weak China economy already, weak earnings in particular for big tech, and then we get the that is why when the Fed cut rates, the initial reaction was mildly positive, but then negative as people started to worry about the economic side and the earnings side. Then we got NFP, and that just really had people saying, okay, this is the moment that we've been worried was coming for about 6 months. So, let's turn around and sell out while we can. And everything escalated from there.
Yeah. Garfield, I've got about a minute. Where do you think the most crowded positioning is right now? Because that's where most of the damage is being sustained.
Yeah, well, I still think there's plenty of crowded positioning for yen bears. That's part of why the yen keeps on taking off every now and then. And there's still a lot of very crowded longs in the tech space in the US. You've got to look at where Nvidia is, look at where Amazon is, look at even where Apple is. Apple in particular has been a pain point today after news came out that Warren Buffett had slashed his stake in that. So those are the immediate obvious places that you would look for further pain.
Yeah, and I was reading that the NASDAQ has shed more than $3 trillion in value over the last few sessions. Garfield Reynolds, who leads our Markets Live Asia coverage, thank you very much. Well, we're going to hand you over to Daybreak Europe now with a continuation of this big markets day. As you can see, it is a sea of red out there. This was our show, Horizons Middle East and Africa. I'm Jemana Versace in Dubai.